From the Library of Congress in Washington, D.C.
Now it is my great pleasure to introduce Larry Doyle, a Wall Street veteran, a successful blogger, and an author. Larry Doyle has worked on and around Wall Street for the last 30 years, having embarked on his Wall Street career in 1983 as a mortgage-backed securities trader for the First Boston Corporation. He served as chair of the Mortgage Trading Committee for the Public Securities Association. After subsequently working at Bear Stearns, Union Bank of Switzerland, and Bank of America, Mr. Doyle culminated his close to 25-year career on the sell side of Wall Street as the national sales manager for securitized products at J.P. Morgan. Currently, he manages his own investment advisory practice. Shortly after the failure of Lehman Brothers in late 2008, Mr. Doyle launched his now widely read blog, Cents on Cents, where he writes on the markets, global economy, Wall Street, and Washington. Mr. Doyle's work is widely syndicated and referenced by major media outlets. He has received significant distinction for the emphasis his writing puts on issues related to investor education and protection. Mr. Doyle's blogging led to his writing his first book, In Bed with Wall Street, The Conspiracy Crippling Our Global Economy, which was published in January 2014 by Palgrave Macmillan. If you find the subject fascinating, you can purchase a copy of the book In Bed with Wall Street after the program and have it signed by the author. There are also copies of a short bibliography on the history of Wall Street for further research. Without further ado, I present to you Larry Doyle.
Gulnar, thank you very much. When I first reached out to, and I also want to thank Yellen, who gave us a fabulous tour of the Library of Congress earlier this morning, to say that I'm humbled and honored to be able to speak at our nation's library has got to be the biggest understatement of all time. So I've had the good fortune to be able to speak at some nice venues. But dare I say, this takes the cake. So, as with any writer and any author, I want to extend thanks to a few people. I want to extend some thanks to my literary agent, Cynthia Zigmund. She found me in early 2012 when I was blogging. I wasn't even thinking book. And after she found me, she said, how come you haven't written a book yet? Because I had been writing, I'd been blogging at that point for about 3.5 years. I want to thank my publisher, the folks at Palgrave Macmillan. I'm a first-time author. I've learned a lot about the publishing business, and I'm incredibly indebted to the folks at Palgrave Macmillan. I want to thank my family. Really, I'm incredibly indebted to my kids and my wife. The level of support has just been enormous. So, thank you. 27 years of marital bliss tomorrow. So, we're living through some truly, historic and challenging times. But to try to put some context into it, and really what goes into this book, 25 years ago today, for a lot of people in this room, you've got that indelible image of that fella in the People's Republic of China, standing in front of that line of tanks. 70 years ago tomorrow, again, we've got this irrepressible image of our, prior generations taking the beach at Normandy. And what do I think of when I think of those images? This concept of freedom. I mean, freedom is perhaps, that's the foundation of our country, that virtue of freedom. But freedom, as they say, it's trite. Freedom isn't free. And dare I say, I personally believe that with freedom comes an obligation. the obligation that we leave our society, leave our country in a better position than we found it. And right now, you know what? I believe that we are truly being challenged. Because when you think of the current state of our economy, 6 years past the crisis of 2008, which could only be compared to the market crash of 1929, we've got labor participation rates at 35-year lows. We've got levels of poverty, at generational highs. We've got income levels for the overwhelming percentage of our population, basically stagnant. We've got a deficit that's projected to run upwards of $25 trillion. What are we leaving for our kids? So it's against that backdrop that given my career on Wall Street, that I started writing, shortly after Lehman Brothers failed in the fall of 2008. And I want to again express some thanks to a friend of a friend, a fellow by the name of Larry Johnson, who works here in Washington and has a political website called No Quarter. He said, could you write a commentary kind of explaining what just happened with the failure of Lehman Brothers and the implications for the economy? And I did. In that initial commentary in, I believe it was October of 2008, I got about 70 responses. And that was an indication to me right then and there how much the American public wanted to understand, hey, what's going on Wall Street and what's the implications and the ripple effect for America as a whole. So it was like, clearly the markets at that point in time were incredibly volatile, and there was a lot of uncertainty. There was a lot of challenges. In response to that first commentary, he said, well, that went pretty well. What else you want to write about? And so I wrote a second and then a third commentary, and over the course of the next 3 months, I wrote maybe, 6 or 8 different commentaries, and I started to develop a writing bug. There was a lot to write about, and again, what was in my mind was I could be a public service, that kind of explaining concepts that are largely arcane in nature, reducing them to a layman's narrative, and it was all about the pursuit of the truth. I'm one of 8 kids. I grew up in a middle-class section of Boston, Mass. And, education was always important. We're a very competitive crowd. I've got 6 brothers out of, so it's 7 boys out of 8 kids, so it was a very competitive crowd. I went to the College of the Holy Cross, where we talk about this pursuit of the truth. So those elements play out in this book. That sense of, intellectual curiosity, competitiveness, integrity, the truth. And so, fast forward, I'm writing at Larry Johnson's blog, No Quarter, when I realized, I'm writing about business issues, and he had a political blog. I should either go write for a business site or, even better, launch my own. So in January of 2009, I'm in test mode on this blog called Sense on Sense. And give some credit to my then 16-year-old son who came up with that catchy name. I'm thinking fiscal courage, and he's like, Dad, boring. Give us, you get into the blogosphere, you need something that catches, catchy. So in about 30 seconds, I'm saying, I want to write a blog about the markets, the economy, and Dad, Sense on Sense. And now, 5.5 years later, the blog is going great. A key date, though, that went into this book was January 15th, 2009. Again, 2008 could only be compared to 1929. The meltdown of, these various Wall Street firms, the 2008 culminating in the greatest Ponzi scam ever perpetrated on Wall Street in the person of Bernie Madoff. Again, you don't need me to kind of remind you of some of that. But what I wanted to really learn, and it was on January 15th, not what had happened or why it happened in terms of, the what being all the excessive leverage, the why being the excessive greed, but how did this happen? How did this happen? Meaning, how did the industry engage, if not circumvent, those charged with protecting the public interest? And who were those? Those were our financial regulators and the politicians, meaning, Senate banking, House finance, government oversight and reform. How did the industry, how did Wall Street engage these entities? That was what really intrigued me. So I set aside my afternoon on January 15th, 2009 for the confirmation hearing of Mary Shapiro to be the head of the SEC. And after about 90 minutes, in which, honestly, they pretty much tarred and feathered Christopher Cox, but I felt like, you know what, they didn't properly vet Ms. Shapiro. Was she the right person to head the SEC that could bring about, meaningful reform to Wall Street? And from my standpoint, I didn't get that question answered. 2 days prior to her confirmation hearing on the 13th, the Wall Street Journal had done a scathing review of Ms. Shapiro's tenure at a self-regulatory organization known as the Financial Industry Regulatory Authority. Please come on in. That's quite all right. And so I figured that, okay, there was some great material there in the journal to address questioning for Ms. Shapiro in terms of the fact that why was it that the level of fines that imposed in cases that had been pursued at this organization known as FINRA had dropped pretty significantly during her tenure. They didn't even touch that. So I turned off my TV mid-afternoon. I said, I'm going to go learn some stuff. And so I Googled this outfit FINRA. And because when I worked on Wall Street's self-regulatory organization was known as the NASD, the National Association of Securities Dealers. And I was not aware that in 2007, the National Association of Securities Dealers had merged with the regulatory arm of the New York Stock Exchange to form this outfit FINRA. I just wasn't aware of it. So in short order, I go back to FINRA's then most recent annual report, their 2007 annual report. And literally, at this point in time, this was really the first time that I started to seriously think, what are the implications and the ripple effects and the ramifications of a self-regulatory organization for an industry as large in scale and scope as Wall Street? And there I'm thinking, to think that, that Goldman Sachs and JP Morgan and Merrill Lynch and Bank of America could fund a regulatory outfit so that they would properly and aggressively oversee them. And I thought, what? That's probably, that's somewhat problematic. If not filled with potentials of enormous conflicts of interest. So, on Wall Street, how does Wall Street work? How do you manage risk? Find information, connect the dots, follow the money. That's how the industry largely works, so that you can, try to understand risk. This book is all about exposing situations which bring about public risk, because we're still all on the hook. So I start doing a deep dive into FINRA's annual report, and I see, okay, self-regulatory organization, potential conflicts of interest. Let's get to their balance sheet. And I see that they've got about a $3 billion balance sheet, and that they talk about an internal investment portfolio. And I'm thinking that, okay, any regulatory oversight of Wall Street, one would think that an internal investment portfolio would have its cash parked in treasury bills to mitigate, if not totally eliminate, the chances for a conflict of interest. And there on page 48 of their then 2007 annual report, I see that this organization, FINRA, has money invested in the equity markets, in the bond markets, in hedge funds, in fund of funds, in private equity. And I'm like, are you kidding me? And I read in their defense that they've got internal investment committees to address the chance for any conflict of interest. But, utilizing my trading instincts, I'm like, okay, you know what? When there's no volatility in the market and doesn't get attention, maybe. But what about, here they are, they're on the pulse of the markets. Please come on in. The pulse of the markets, their access to information, I seriously question, how aggressive they would be, because they make their own trading decisions. And as I say in the book, they left 1 cent in their investment portfolio, one clue, the cent of which was phenomenal. they actually, because all these other holdings, their equity holdings, they were nondescript. It wasn't like, we've got money invested with Goldman Sachs or in General Electric, any of this. It's all nondescript. But they left this one this one clue. They had a third of their investment portfolio was invested in a sector of the market known as auction rate securities, which I don't know if anybody in the room is aware of what happened in the auction rate securities market. The auction rate securities market was a $330 billion market, okay, which totally failed. It was promoted as a cash surrogate or a money market equivalent. And that market totally failed and froze on Valentine's Day 2008. So I'm thinking that, okay, what did FINRA know? Did they utilize information perhaps that they could have accessed, because obviously they're very closely aligned with Wall Street, to liquidate their own holdings, to protect their own interests, or did they share information as to what was going on and protect the public interest? I brought that, and here I am in mid-January 2009, trying to understand, again, how did the industry engage the regulators? So was the public interest being protected? That was my motivation at that point in time. That remains my motivation at this point in time. And that's the theme throughout this entire book. So I brought that information to those reporters from the Wall Street Journal who had written that scathing review 2 days prior. Called them up. I said, been in the industry for 25 years. This is meaningful information, and I personally think this is a great lead. You just had a phenomenal article, exposing Ms. Shapiro, calling her kind of a weak regulator. Here's a great follow-up. We have great back and forth for the next 2 weeks. When they told me in late January, you know what, we don't have the green light to pursue this lead. And I'm like, are you kidding me? So here, I'm thinking that, is the regulator protecting the interests of the industry or protecting the public? And now I'm questioning, well, wait a second. Is, our major financial periodical, again, perhaps protecting the regulator who's protecting the industry, or are they protecting the public interest? And I'm getting the word from these reporters that they don't get the green light to pursue this lead. I'm like, you know what? My adrenaline really started to kick in here at this point. February 4th, another key date in this book. So hold that thought on the auction rate securities. We're going to come back to that in a second. February 4th, 2009, a fellow by the name of Harry Markopolos. Some may know Harry. Harry was the whistleblower who had brought information to the SEC over a 10-year time period, 29 different red flags as to why Bernie Madoff was operating a Ponzi scam, okay? And the SEC totally failed, okay? Totally failed. Harry Markopolos gets called to the Hill. Come on down, Harry, tell us what you know. And so he lays out the whole thing, and he defined the SEC as, I think the term he used was Keystone Cops and deserving of an A+ in incompetence. And they asked him, the members of the committee asked Harry, they said, well, Harry, why didn't you bring the information to the folks at FINRA? And I'm watching this, much like I was watching Ms. Shapiro's confirmation hearing. And Harry Markopolos, who at this point is accepted as tremendous integrity, really put himself at personal risk. He said, no, I would not have brought this information to FINRA. And they said, well, why not, Harry? He said, well, if the SEC is deserving of an A+ in incompetence, the folks at FINRA are in bed with Wall Street and deserving of an A+ in corruption. And I'm like, wow. At this point, the SEC is getting tarred and feathered in the newspapers for their failure to perform on the Madoff situation. I mean, they are a daily punching bag. But all my focus is on trying to get even closer to Wall Street, so I'm focused on this organization, FINRA. And when I heard Markopolos say that, I figured, okay, you know what? This will be reason for meaningful attention on that organization, by the folks on Capitol Hill. Anything but. I continued to dig, and I started writing about this, auction rate securities, and word travels very quickly through the blogosphere. And these auction rate securities investors, became aware that the primary regulator overseeing that sector of the market had holdings, and, people are like, I have been, soliciting that regulator now for a year, trying to gain get my cash back, because the cash that was tied up in those auction rate securities was used to fund businesses, to pay for kids' private educations, public education as well, any number of things, retirements, and people couldn't access their cash. That had a meaningful impact on the economy, a $330 billion market. $330 billion market. I mean, that was close to half the size of the bailout. And I'm blogging. And at this point in, early February, I've got my, my siblings, so I've got about, the 8 of us reading it, and then assorted family members, and I'm like, hey, we need some answers here. And, but then these auction rate securities people catch up on this, and now they start like, are you kidding me? This regulator was, involved in this sector of the market. So, I start chasing that down. I give credit to the folks at Bloomberg. I brought that information to folks at Bloomberg in late February of '09. And to their credit, they pursued that story. And they exposed the fact that mere months before this market totally failed, on February of '08, that FINRA did liquidate their holdings. And I maintain that, okay, you know what? In my opinion, that was, I think you could make a compelling case that they engaged in what you define as either insider trading, if not front-running the market, and that they failed to uphold their mandate to protect the public interest while they protected their own interests. And I called them on the carpet on that just a month ago. And I said, you know what? The American public deserves to see your trade tickets, and we deserve some meaningful transparency there, because there are still about $50 billion worth of those auction rate securities, that remain outstanding, sold as a cash surrogate 6 years later. That's a problem. So I'm chasing down that story when I see in the summer of '09 a legal brief that was filed on behalf of a minority broker-dealer called Amerivet Securities from Moreno Valley, California. And this was like, wow. So I read the legal brief, and they start questioning. They're asking basically the same questions that I was asking. Goes straight to the governance of this regulatory organization, FINRA, which, again, reported up through the SEC. So, again, in the back of my mind, I'm like, we got a corrupt organization reporting up through an incompetent one. Who the heck is looking out for the American public? And so I called up the law firm, and that law firm was right down the road, over on C Street, I believe. A law firm by the name of Cuneo, Gilbert, and LaDuca. I called them up and I said, I'm interested in learning more about your case. I distinctly recall, as if it were yesterday, the lawyer on the other end says, you the guy that writes that blog? I said, yeah, indeed I am. They said, we read your blog every day. And then he goes, you're looking at the same stuff we're looking at. And to me, again, it was all about how did this regulator, they were questioning their basic governance. How did the regulator oversee the industry, on any number of fronts that allowed practices to occur that ultimately brought our economy and our markets and our economy, if not our nation, to its knees. So I engaged those lawyers, and they shared, again, what lawyer bringing a case doesn't like getting some publicity, right? So I'm writing about this stuff on my blog, but it wasn't being widely covered by the major media, which, again, was just like, that to me was problematic. Because it's all about information. The public at that point in time, and even still today, deserves information. They do. So I'm chasing that case down, and I go into the courts, and I'm listening to the hearing. And what was FINRA's defense? What was FINRA's defense? And this is very interesting. Their defense in that case and subsequent cases was absolute immunity. This is a private organization, a private non-governmental organization that reports up through the SEC that is granted for their regulatory oversight the same privilege as every government agency, and that is absolute immunity. And so I'm thinking at that point in time, wait a second, they're not subject to the Freedom of Information Act. They provide very little meaningful transparency, but they have the privilege of absolute immunity. You don't need to grow up, in the city to think that if you got absolute immunity on one side and little to no transparency on the other, what do you have going on in the middle? To me, that's nothing more than a license to steal. And so I maintain that, the misappropriation of funds in their liquidation of auction rate securities, you could probably put a dollar value on that of about 200 million bucks, given where the secondary market for those securities, went then and remains today. Those were funds that belonged to, mom and pop. That's wrong. So I engaged these lawyers, and we start talking about that case. And they said, well, what do you know about this other case? And I said, what other case? They said, this case, Standard Investment Charter. They said, this Amerivet case, it's a very interesting case. This other case is really where the rubber meets the road, because it's truly the intersection of Wall Street and Washington. The Standard Investment Charter versus FINRA case dealt with the merger of the NASD with the regulatory arm of the New York Stock Exchange in 2007. And what these lawyers shared with me was the proxy statement utilized for that merger. A proxy statement is a legal document that is shared with members of the NASD at that point, just like any shareholder of a private company would get a proxy statement if that company is going through a merger that shares all the specific financials of the merger. And what this lawyer shared with me was that merger, well, let me just read it to you, okay? On page 105 of the book, this is the attorney, Richard Greenfield. We were able to get discovery, that is document presentation from the NASD, very early on. Many of these documents were produced under a confidentiality order. In other words, the NASD would not produce them unless they could be kept confidential, i.e., not in the public record. These documents showed unequivocally that the NASD defendants lied to the members of the NASD, and there were 5,100 member firms. Blatantly, unequivocally, you can't put any coloration on it. You can't say they were negligent. They intentionally lied. The lies are repeated over and over in a proxy statement. They are repeated in roadshows taken all around the country. What were the dollar values of those lies that these lawyers, again, alleged, were shared in that proxy statement? They put a dollar value on those lies of between 180 and $380 million. So here I'm thinking like, okay, $200 million in auction rate securities, another 180 to 380 here. Pretty soon we get to, somewhere between 400 and $600 million. And I'm thinking, you know what? Harry Markopolos was right. This crowd is in bed with the industry. Because what was the payoff to the Wall Street firms? What was the payoff to the Wall Street firms? You end up with one regulator, lessened premiums, okay, lessened premiums in terms of funding that regulator. And now, I'm thinking that, okay, appears to me that this regulator is pretty much bought and sold. And again, let me just stop here for 1 second. I remain involved in Wall Street. I love Wall Street. I state that right in the book. America needs Wall Street. We need healthy capital markets, but we need fair, effective, free, and balanced markets. And I would maintain that right now, we've got anything but. So what is this book all about? It's exposing, regulators and public officials who, to me, kind of run the gamut from either being asleep, incompetent, captured, this term regulatory capture. And it's not just the financial services industry in which you have this regulatory capture, in which the regulators end up protecting the interests of the industry instead of upholding their mandate to protect the public, okay? So it goes from asleep, and again, this is not to malign each and every individual in the regulators. It's not. That would be blatantly unfair. But the system as a whole has developed this way over time, and what's behind that? Huge money and huge power. Okay, huge money and huge power. So we've got these regulators and politicians who run the gamut from being asleep, incompetent, captured, and let's be true. Let's be blatantly straightforward here. There's very real corruption that has occurred here as well. In fact, what's interesting, in today's Wall Street Journal, the UK Prime Minister, David Cameron, what did he write? This is what he wrote just this morning. Corruption is the arch enemy of democracy and development. The best way to fight corruption is through greater transparency. And that's what this book is all about. It's all about transparency. So, at this point in time, I'm running down these paths, and I look at other situations that FINRA and the SEC are involved in. If you've got a dispute on Wall Street, whether you're an investor or an employee, you're not going to court, you're going through arbitration. That's an industry arbitrator. And I start looking at the statistics for arbitration, and I start questioning those aggressively. But then I also looked at some specific cases, and I highlight one specific case of an individual, because really what I wanted to do with this book was make it a personal book. I wanted this to be an easy read. Take arcane documents, reduce them to a layman's narrative, all documented, plenty of personal stories, so that everyday Americans can say, I identify with these people. So I write about this one fellow who was, he was a banker at Morgan Stanley. And he left there, and he pursued an arbitration case based on a situation, and he lost his arbitration case. You know what? Half the people lose. If that was the extent of it, he wouldn't be in the book. But he wanted to appeal his case, and it was a hard-hitting case. So in order to get an appeal, FINRA is obligated to provide tape recordings, of the hearings. And there were 18 hours worth of testimony in this fellow's case. And so he said, I want to appeal, so I need to get that testimony. And they gave him 10 hours of testimony. So he went back and he says, I get 10 hours, there were 18, and it's not the first 8 hours, the last 8 hours, or any consecutive 8 hours. He says, you're actually missing 8 hours of testimony at 14 specific points in time. And it just so happens that at those points in time is when Morgan Stanley's lawyers were being questioned by my attorney, and we were maintaining that what they were saying was a blatant misrepresentation. So this is like the guts of the case. So, you know what? My livelihood, my family's well-being, my kids' education is all on the line here. You know what? How about giving me those tapes? And what was FINRA's response? Sorry. And you know what? You got no follow-up. That's it. Story's over. So I define that as a kangaroo court. And they may not appreciate it, but you know what? Too bad. Because if it wasn't that one fella, you ever hear the phrase, you never find just one mouse, right? How many other individuals have been compromised through the arbitration process? And what's interesting is that, just a couple of weeks ago, a representative of FINRA said, inadvertently there are times where the individual operating the recorder, failed to perform. And I wrote on my blog that day, what are the chances that they failed to perform because again, 8 hours of testimony over an 18-hour case. What are the chances that they failed to perform for 34 minutes and 18 seconds at an average point in time, just so happens when the Morgan Stanley lawyer was hearing? You couldn't get odds in Vegas on that sort of stuff. But they pitch it to the American public as check the box, on to the next one. So again, they may not appreciate it, but the public interest deserves better. So I go down that case because to me, auction rate securities, that to me was front running or insider trading. That's wrong. Again, the Amerivet case, failure to perform, lack of true governance. The Standard Investment Charter case, I maintain a misappropriation of funds. Arbitration, kangaroo courts, a lack of due process. These are basic rights. And they get to hide behind this veil of absolute immunity. Something wrong here, folks. And who's supposed to be held to account here? The SEC. The SEC oversees this organization, FINRA. But the SEC, truth be told, over the course of the last 5 years, has been, swimming upstream because they're trying to recover themselves. So, ultimately, when I look at this, I'm like, you know what? Wall Street, to a very large extent, really reports to nobody but itself. That's a problem. That's a problem. And why is that a problem? Because what you have here is you've got a significant erosion in trust and confidence in the system. And trust and confidence, those are the cornerstones of not only our economy, but ultimately our nation. And this is where, those who are charged with upholding the public interest need to be held to account. And so I hold them to account, because here we are, 6 years after the crisis, unfolded, and within the last 2 months, we've gotten these revelations from, senior regulatory insiders. An attorney within the enforcement division of the SEC just defined the SEC, just within the last 2 months, as little more than a toll booth on the bankster's turnpike. That's not a problem. I don't know what is. A commissioner of the CFTC. The CFTC is the regulatory outfit that oversees the derivatives market. Okay, just a month ago. I do not believe that the CFTC systems are adequate to oversee today's fast and complex derivatives markets. That's a problem. That derivatives market, a quadrillion in size. A quadrillion, that's 1,000 trillion in size. And they don't have the systems to monitor this. And we're being told that, oh, you know what, Wall Street's been reformed. I say, are you kidding me? Sheila Bair, former chair of the FDIC, what did she say about the regulators? The regulators have not had the fortitude to stand up to the forces imposed upon them by the industry and Congress. And what are those forces? Huge money, huge power. Huge money and huge power. And so they don't have the fortitude to stand up to them. This is a problem because, again, as the American public, we remain on the hook. Alan Blinder, Wall Street's mode of self-regulation was a mistake. So I see these things coming, and I watch this stuff very closely and thinking, who in Washington is listening to this? The folks right over there are supposed to not only be listening to this, but doing something about it. Tim Geithner himself, when asked about the too-big-to-fail banking model a few weeks back, does it still exist? Yeah, of course it does. We're all on the hook here. So again, this presumption of investor protection, that's really what it is. We presume that the regulators and the public officials are doing their job. We presume that going into the crisis, and we continue to be fed that presumption coming out of the crisis. And what I'm saying is, you know what? Please read my book, because I think that they failed and that they continue to fail. And what is the failure here? Ultimately, this is a failure of leadership. It really is. It's a failure of leadership, the failure of the public officials on those congressional committees to say, you know what? Stop it. Stop it. And because what's behind that? It's huge money. There's huge money. I mean, from 1998 to 2008, Wall Street would send Washington about on an annualized basis, about $500 million. Okay, that goes to fund a lot of things, okay? Obviously, since 2008, there's been a lot more on the line. The amount of money that has flowed from Wall Street to Washington has pretty much tripled. How is the public interest, how does the public interest get represented? And this is an apolitical book, and this is an apolitical issue. So, again, I honestly, I could talk for hours on this stuff. So, one other case, though, because a lot of people say, how come people in the industry didn't speak up? The fact is, there were people that were speaking up. There were whistleblowers. And what is the consistent experience of these whistleblowers? And I profile about 10 whistleblowers. First, they get ignored. Just ignore them, don't listen to them, and maybe they'll get the message, okay? For those people who continue to blow the whistle, then they get intimidated. Like, you may not want to continue to do that because your job may be on the line. And ultimately, what happens? They get fired. They get fired. And that's wrong. There was I want to share one quick story, and then we'll go into to the questions. There was an attorney at the SEC, a fellow by the name of Gary Aguirre. If for no other reason to read my book is to read the story of Gary Aguirre. Gary, a phenomenal individual. Because what did we have coming out of the crash of 1929? We had a fellow who came to Washington by the name of Ferdinand Pecora. And Ferdinand Pecora was a tough New York City lawyer that basically came down and tarred and feathered and exposed, the bad practices and the individuals, who were engaged in those practices back in the 20s that brought upon the crash. A lot of people ask, like, where's our modern day Ferdinand Pecora? Where is he? Where is she? Where is he? And so they end up saying, well, these issues ultimately are systemic. I would maintain that Gary Aguirre could have been our Ferdinand Pecora, because Gary Aguirre worked at the SEC. And back in 2005, he was in the process of making an insider trading case against the largest hedge fund in the business at the time, an outfit called Pequot Capital. He saw some trades that were clearly problematic, and he started pursuing this case. And the trail of evidence led to the door of one of Wall Street's most powerful men, a fellow by the name of John Mack. And so he went to issue a subpoena to take Mack's testimony. When Morgan Stanley engaged a lawyer, a woman by the name of Mary Jo White, to intervene on their behalf. Mary Jo White just so happens to be our current chair of the SEC. To intervene on their behalf. And what happened to Gary Aguirre, who for the prior couple of years at the SEC had been graded as a star attorney? A star. He's like, this is the guy. Within the next 2 to 3 weeks, Aguirre pushed back. And what happened to him? He got fired. 999, if not 900, out of 1,000 attorneys, if not 1,000 out of 1,000 would say, I get it. You know what? I just touched the third rail. The power of Washington, the money of the money of Wall Street, I get it. Aguirre's that one lawyer. He didn't take it sitting down. Aguirre, over the course of the next 4 to 5 years, utilized the Freedom of Information Act to go back into the SEC to get the necessary documentation to pursue that case. And he made the case as a private citizen. And in 2010, that hedge fund paid a $28 million fine, and they were shut down. But in the process of making that case, Aguirre not only had to clear hurdles coming right out of that building, right over there, but also, hurdles at the SEC, people pushing back on him. And what did Aguirre share with me? On page 144 of the book, he shared the following with me. By the time I was fired, I pretty much figured out what was going on at the SEC. I saw how the enforcement division, from the top down, had acted to block the Mack investigation, despite the fact that the evidentiary trail led directly to his door. I saw how SEC management would create a fictional rationale for not pursuing the investigation against John Mack, which would be immediately replaced with a new one as the last one imploded. Somewhere between the third and fourth fictionalized account, I understood just how deeply the corruption was embedded in enforcement's management. By the time they fired me, my reaction was, do they really think they'll get away with it? And they didn't. Gary not only made the case, but he brought a wrongful termination suit against the SEC, and he was the first individual to be paid a whistleblower award in that pursuit, to his credit. In my opinion, Gary Aguirre is an American hero. So what does it all mean? It's all about transparency, folks. You know what? It's all about transparency. It's all about transparency is the great disinfectant. And why is that? Because all those economic headwinds that continue to come this way, which promote a central banking policy, which is nothing more than a tax on the savers in this country, and that's really what it is, a 0% Fed funds rate, may be appropriate to try to regenerate some strength in our economy, but it's a tax on savers, okay? So much like this Harvard economist, because what have I seen and what do I detail in this book? I believe a significant degradation of the rule of law, excessive cronyism in a violation of investors' property rights. Those are very real. Those are very real situations. They have a negative impact on our economy because in order to commit capital, the capital needs to be protected. And if capital is not protected, people either don't commit it or it comes at a higher price. And in order to generate organic growth in the economy, that's what we need. We need organic growth in order to bring about a resurrection of the American dream. Our kids deserve better. They do. And so Neil Ferguson, a Harvard economist, when countries improve the rule of law, property rights, and investor protections, and when regulation becomes more transparent and corruption reduced, there are major payoffs. The payoffs is organic growth, increase in trust and confidence. But what happens is, in order to do that, what do we have to have? You know what? The scandalous practices that people just accept as, that's just the way that it is. Well, here I am, I'm stating, we can do better. We shouldn't, manage ourselves as, hey, we're the best regulated markets in the world, as if we're supposed to accept that, you know what, there's going to be a degree of corruption. If that's the best that we can do, you know what, shame on us. And you know what, I got a blog, I got a voice, I've now got a book, and I'm willing to not only state those things, but chapter 12 in the book, because I'm not just going to expose situations. Chapter 12 is perhaps the chapter that has gotten the most attention in this book. And on the back of the page that I handed out, there's a representative sampling of my proposed reforms, things that I believe should occur. And what are those? Specific reforms for the industry all get to transparency and disclosure. FINRA should be subject to the FOIA. They should be subject to an independent outside audit. Because what's the problem here? Michael Lewis just wrote a fabulous book called Flash Boys, okay? What Lewis is talking about in Flash Boys, I define as, that's a symptom. You know, this front running in the equity markets, much like collusion that has occurred in the interest rate markets with LIBOR, in the currency and commodity markets. Folks, let's take a step back. All of these practices are symptoms. It's actually fairly rational. If we've got the cops kind of in our pocket and we're only hit with fines, you know what, that are little more than a cost of doing business, even if they're egregious, from a management standpoint, you know, what we've got on Wall Street right now is, you know, massive collusion in these markets. And what is that? Those are symptoms. This is the cause. We need our public officials and our regulators to perform. So what we hear, unfortunately, coming out of Washington is, you know, this debate between more regulation versus less regulation. In my opinion, it's not a question of more or less. We need effective regulation with real regulators. So, so I lay out these reforms. Ultimately, the public policy measures, we need campaign finance reform. I mean, because again, the root of all this is the enormous money. So I encourage people to actually sign up with a grassroots organization out of Massachusetts called Represent Us. Represent Us is addressing this corruption, you know, the excessive money. And they're going to look over, you know, the coming years to try to get on city and state ballots and ultimately on the ballot here in Washington so that public officials cannot accept money from firms or industries that they're regulating. And that would obviously change, but that issue polls at north of 80%. The American public, that's exactly what they want. It's exactly what they want. So lastly, and then we'll get to some questions, Wall Street is an oligopoly. We've got a handful of firms, enormous power. We need to reinstitute Glass-Steagall. I firmly believe that the elephant in the room in the form of these too big to fail banks, we're all on the hook. We're all on the hook. And in my opinion, it's not a question of if, but when we have another crisis. And then what do? You know what? My kid deserves better. All our kids deserve better. So, again, I've got a blog, I got a book, and I'm happy to address these issues because this to me, this goes back to the obligation that we all have to try to leave this land a better place than the way we found it. So to that end, I hope you'll read the book, Knowledge is Power. I hope you share it with your friends and colleagues. Honestly, I hope you share it with your public officials as well. And lastly, I would encourage you to join that organization, Represent Us, and just share their work as well. So these are you know, let it not be said that we're not trying to do, you know, what's best for future generations. I end the book with, you know, future generations deserve nothing less. So on that note, I thank you so much. A question there and back.
My question is, so you say the book is political.
Yep.
But it's directly political. When you have the Supreme Court that just says we can give unlimited money
Huge
to
problem.
politicians.
Yep.
When we've only recently had an oversight where members of Congress and the Senate, their families could use information that they're sitting on
Yep.
to
That's right.
without any type of repercussion or any type of punishment. It was an oversight. And now we have a situation where we have the most senators and congressmen in history that are millionaires and multimillionaires.
Yeah, public service has become a for-profit enterprise, right?
And the people that they're supposed to be regulating, these are their friends. These are the people
The system's broken.
they school with. These are the people they share dorms with. They're in their fraternities. How can we get our public officials to do the right thing against their friends?
Well, you know what? I mean, aside from represent us, I also want to. I see Michael Smallberg here from Pogo. People should track the work of the Project on Government Oversight because their work to bring real transparency to these issues is off the charts. And you know what? People feel like, what can I do? You know what? Just keep hammering away at your public officials. Just keep hammering away at them. Because, through a collective voice, and that's, I don't want to say that that's all we can do, because that's a lot. And so we have to. We have to continue to hammer away at them because, a conspiracy, and that's really what this is. It really is. This is a conspiracy. They're not representing the public interest. And so I would just say continue to hammer away at them. Tell them to read this book, Answer to the Book, amongst other things. So, but you're right. And so when I say it's apolitical from the standpoint of, there are people on both sides of the aisle that are feeding at the Wall Street trough. It's not one part or the other. They're all in it, and they can talk. And there's a lot of talk that goes on, about transparency. But ultimately, they follow the money. So, why don't we go right here?
We hear over and over again that corporations are people.
Yeah, it's a problem.
If I go in a jewelry store and pocket a diamond ring, I'm going to go to jail. How come none of these people, and it's people who are committing these crimes, why don't they go to jail?
Again, this is because we end up with public officials, who aren't doing their job. Let's boil it down. And again, Wall Street is a great example. I mean, come on. There was nobody on Wall Street, no individuals who were truly meaningfully held to account. And now, you see the Department of Justice kind of, doing the backstroke because they get the public outcry. And so, okay, we got to go get some guilty pleas. And, maybe you end up potentially with a potential, trade conflict with France because instead of going after perhaps J.P. Morgan or Bank of America, I mean, the fact is it's all these. It's just these end up becoming basic business practices where, corruption just gets so deeply embedded. And so, yes, I mean, the root of all the problems is money. Public service has become a for-profit enterprise. So, trying to get the incumbents out of this town. So those again, these are huge problems. And can we say, okay, it is what it is, and you end up with kind of a cynicism and people throw their hands up? Unfortunately, that's what we get a lot of. Or we can fight back.
But these are crimes of individuals, ultimately.
Sure it is. Oh, without a doubt.
So why are the stockholders the ones that pay? Why aren't the people that commit
That's,
the crime?
again, private personal gain, social costs. That's the business model, right? We'll personally profit. Heads we win, tails they lose. That's a problem, enormous problem. All that stuff was what really motivated me to ultimately write this book. Okay, let's go right here.
It seems to me that what you're addressing is sort of symptomatic of what's happening, irrespective of which party is in power. I mean,
That's right.
Bush as well as Obama, they hand out ambassadorships to people who haven't never heard of the country just on the basis of fundraising, donating money to their party. If you look at who was in charge of FEMA just before Katrina, right? If you look at the head of the FDA under Bush, it was a lobbyist of.
Well, you reduce this down. It looks like payoffs and kickbacks, right?
Right. If you now look at FCC and the internet neutrality issue, who's the FCC, right? Lobbyist.
Yep.
So irrespective of party, it seems to be the model, indeed, how Washington works. But sort of asking the question looking forward, if it's just a matter of time then before the next cyclical downturn happens,
Yep.
Wall Street regulations. How do you anticipate the American public will react in the context?
Well, I will say this. The fact that this room is filled and every other venue that I go to is filled, the American public is, in my opinion, really starting to get it. And because what's the, you know, what does Washington end up doing? They look to the Federal Reserve to effectively devalue the currency, and that impacts our future quality of life. That's how they're getting away with it, to try to monetize the debt. Okay, the risk that you run here, and again, I'm not, you know, is the potential you take that to the nth degree, you end up with some degree of civil or social unrest. Okay, and again, I'm not here to try to stimulate that. What I'm here to try to stimulate is gaining information. You know, there's nothing better than an informed voter. Okay, and expressing opinions strongly. The reason why I wrote this book in as forceful a fashion as I did was to get their attention. And, but you're right. These are, to me, what you just laid out there ultimately is a failure of leadership.
But Occupy Wall Street got people's attention as it spread out all over the country, but it didn't.
You didn't see real change. People say, if that wasn't going to create the change, what the heck is? But that's the reality. That's the reality. And in my opinion, along with the bailout, because I think the only thing worse than bailing out would have been not bailing them out. But what they should have done was, okay, you know what, we're bailing out, and then guess what? We're changing management. We're changing management. And guess what? Because it was a systemic. They were all going down. And because of the interconnectedness of the derivatives market, all these firms were tied together. You know, they all were. They were all going down. And you know what? So I do think they did the right thing. But the problem is, once they got that money, Wall Street knew, we got you. We got you. And they've played that card ever since. You're beholden. And this is where that revolving door comes into play. You know what? You want to be on this side of the table. And how do they end up in that position? You know what? Kind of a failure to perform. So this to me is, you know, where are our leaders? The people who are saying, you know what? I am going to actually work for the public interest. And I'll take the heat. We're looking for those people, right? Back there.
What's the future of Fannie Mae and Freddie Mac?
Socialized housing, right? And in my opinion, that's a problem. I mean, this country wasn't built upon, you know, socialized housing finance. Because in my opinion, socialized housing finance goes to mispriced credits. And again, private gain, socialized cost, that's not the way that capital gets effectively and appropriately allocated. But that's where I see this thing going. Right here.
Yeah, if you look at the Transparency International survey that they
Yep.
do every year, the United States still ranks very high in terms of perception of public sector corruption. It's actually considered to be on the low end. So how do you square that with what you've been?
Yeah, I mean, it's the type of thing. You know, who are we judging ourselves against? You know, it's like, okay, that guy's really corrupt over there. You know, we're just a little bit corrupt. You know, as if to say, oh, well, that's okay then. You know, it's, you know, well, Chicago, you know, Chicago politics. Hey, you know, they're really corrupt over there. So, you know, we're just taking a little bit of money. So, but we're supposed to be able to do better than that. And I think and actually I reference this World Justice Project in the book, and they look at relative countries, you know, relative to our overall income levels. We don't grade that well. You know, we're probably in the lower quartile of some of those countries. So I personally think that we should start to look at the way that the banking system in Canada is run. We should look at some of the programs in, you know, Australia and in some of the Baltic countries, and utilize some of these things as a model. And I'm not saying that this is ultimately a pro-markets, pro-capitalism book to expose the corruption and the cronyism. And if we can start down that process, in my opinion, other good things will happen. So, but yeah, I mean, we're supposed to be able to do better than this. I don't know if that problem, is a sufficient answer, but to me, it all goes back to leadership. It really does. And the fact that, you know what, I don't know that we're attracting the best and the brightest to Washington, because a lot of people are like, well, why would I want to work in that? Where I'm surrounded by a cesspool.
Let's take one last question. Right up here.
And then we'll go out and sign books right here.
Yeah, historically speaking, has it always been like that?
Well, certainly to a degree, there's always been. I mean, you can go back and look in time. There's always been, I think, corruption in politics, but 2008. There was only one year that could be compared to, and that was 1929. So that was a big one, and we're still living with those effects. And it's global. It's global in nature. So yes, there's always been problems, but I would also say have we ever had a deficit that's headed towards 25 trillion, and that's on the balance sheet? No, we haven't. All that is, what is that? That's a bill for future generations. So how do we generate organic growth? Again, let's get back to the preeminence of the rule of law, protecting property and investor rights, and exposing corruption. You get that, honestly, so you get a little bit of a tidal change, in the system. In my opinion, capital, increased capital will flow so that, the Federal Reserve can get their interest rate back to, 2-3%, so that it's not a tax on savers. So I hope that, again, I thank you profusely for coming. I hope that you will read the book. I'm happy to sign books out there and share it. And Gulnar, thank you very much. Okay.
This has been a presentation of the Library of Congress. Visit us at loc.gov.